Tomorrow's Senate committee report into banking competition promises to be comprehensive, and it may have consequences for banking revenue. That's the hint from its chairman at a banking conference in Sydney today. This week's profit results revealed that revenue growth is getting tougher for banks, although NAB has done better than most, thanks to an aggressive pricing strategy. Here's Philip Lasker.
The big banking profits are still coming, but they're not coming quite as easily.
We expected fairly modest growth at a net income level, and that's what we saw. We saw a 1 basis point increase across the results of the banks, and that was on the back of pretty modest increase in lending asset growth, about 2.9% for the retail book and really flat for business banking.
The National Australia Bank was one of the better performers. Net profit for the half year was $2.4 billion, up nearly 16%. Revenue rose almost 7%. Bad debt charges fell nearly 20%, while the dividend was lifted to 84 cents a share.
It demonstrates we've set the right strategy for the group, that we're executing well against that strategy, we're improving our return on equity, and we've positioned our bank to compete sustainably in an uncertain environment.
Improving return on equity is not easy in a slower growth environment, and analysts say cutting costs and reducing bad debt expenses will help, but the banks will run out of levers.
The interesting question is what happens 3 to 5 years out, particularly with Basel III rules coming in, which will increase the level of capital they need to hold. It will increase the level of low-yielding liquid assets they need to hold. And it's also in an environment where, globally at least, regulators and governments are looking for less risky and more stable banking businesses.
Not to mention the prospect of higher global interest rates.
The economy probably couldn't withstand an interest rate rise just at the moment, but having said that, we are in an interest rate environment that will rise.
But that rising interest rate environment and the threat of delinquencies didn't seem to worry the NAB chief, who's won a bigger share of the mortgage market through an aggressive campaign offering the lowest interest rates and less fees.
We're comfortable with our mortgage delinquencies and we don't anticipate there'll be issues going forward.
But accounting firm KPMG has noticed an increase in 90 days past due problems across the banking sector.
I don't think you can ignore this uptick, and clearly if we've got a rate increase happening later in the year, as most analysts expect, we'll need to really watch closely that portfolio and any stresses that are coming through in the retail books. And I think the budget announcements as well, we'll need to watch closely how that impacts on consumers.
Most bankers will be watching tomorrow's report into banking competition by the Senate Economics Committee, and today they were watching one of its members.
It's far more comprehensive, I think, a look than either the opposition, the government or the Greens have taken so far in what they might be looking at, and quite clearly some suggestions come with consequences.
Stay tuned for the complaints.